Hey traders, Raghee here, and a common question that I do get asked is, if I had $10,000 to invest right now, what would you do? Well, here is exactly what I would do. So first of all, what we want to remember is there is an overall drift to the stock market. So there is the edge of time. If you're looking for a certain trend, remember, time is going to be your absolute best friend. So what we're talking about here is an entry that has months, if not years, ahead of it to grow your account. The first thing that I would look at is XLV Healthcare. This is a weekly time frame chart of the XLV. Now, if you're buying XLV, what are you really buying? You're buying Johnson & Johnson, Lilly, Abbott, Merck, Pfizer. These are the groups that have these types of healthcare stocks within them. And with one ETF, you're able to get a lot of stock exposure with a simple buy. XLV would be a buy specifically, and it's very close to it, 130 down to $127.50. So what would you do with a trigger like this? We wait for XLV to come down into the zone where I would buy shares of the XLV ETF with the expectation that over the course of the next 2 months to 2 quarters to 2 years, having bought this low, we could see appreciation. And by the way, this is exactly what I do for my long-term account growth strategy. Find names that are near important support levels and buy them with the expectation of growth. Now let's shift gears and take a look at another sector. In this case, oil services and the stock Exxon. Exxon is a beautiful dividend yielding name of about $1 per share. And if Exxon sinks down to the 100 level, down to the 97.90 level, so you have a zone, not just one level, but a zone you're waiting for Exxon to sink down to, I would buy Exxon. And again, I'm looking for anywhere from months to quarters to years moving ahead. Now, one of the great things about a dividend yielding stock like Exxon is once you've bought those shares, you're also getting every quarter $1 per share. And this is just going to add to the overall account growth. Now, what about risk management? All right, well, let's think of it this way. If I'm looking at Exxon, I'm also looking at the overall growth in not only crude oil, but oil services. One of the great things to remember about risk management is if we buy quality stocks on dips, the type of drawdown, unrealized loss that we could experience is usually far more limited. Another thing to keep in mind when we're buying ETFs, like the aforementioned XLV, we're not buying one name alone, but rather a group. And some stocks might be performing, some might be underperforming, but there's a nice dilution of that overall exposure so that if one stock has a really bad month or a really bad quarter, that's not going to drag necessarily the whole group down. Now, common mistakes are thinking about buying these names at all-time highs. That's like climbing up a tree out to the limb, and there's a lot of danger from there. You could fall. So notice what I'm doing. I'm finding support levels that price could reach. In fact, in some cases, has reached before, and we would expect that buying support, as it has done before, to step in and buoy these names back up. So that's one of the common mistakes investors make. They chase all-time highs, and then the first pullback that happens, they're getting shaken out. But with this long-term strategy, what I'm showing you is we can buy these names on sale and have much better risk management and much better growth for the long haul with these precise setups. And this is exactly what I do for my long-term strategy. Find the stocks that have the highest performance possibility and buy it at the price that makes the most sense from a risk-reward perspective going out multiple months, if not multiple years. And here's the great part. If you want to get my long-term growth setups, make sure to check out the long-term growth room at the link below.